We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I am here today with Alina Trigub from SAMO Financial, and we are looking forward to a discussion today about all things, hopefully real estate investment or investing that she knows and is willing to tell us and willing to share with us. So, Alina, how are you today?
Casey, I'm doing great. I'm excited to be here. Thank you so much for inviting me.
Well, we're certainly excited to have you. We're always glad to hear new stories and different stories of how people got to where they are today. So why don't you start out and just tell us a little bit about yourself, and let's go from there.
Sounds good. My background is in tax accounting. But before that, I came here to the States almost 30 years ago with my mom as a poor immigrant. And I was at the point deciding, what do I want to do? And someone told me, hey, you're good with numbers, just go for accounting. I went with that idea. It was not the right idea, but I got to try accounting, spent about 5 years in it on and off in private and public, realized it wasn't for me, and was able to switch to the world of information technology, where I had a pretty successful 20 plus year career and was doing real well, progressing in my journey in to the higher levels. And while doing that, the tax accountant stayed in me, and I kept thinking to myself, well, my and my husband's tax brackets keep growing. I have to do something about this. I need to find a way to minimize our tax impacts. And real estate kept coming up, and I finally decided that I had to take action. Started real estate research, looking into it. And after a number of iterations and trials and errors, I ended up investing in real estate syndications as an equity partner. This was about 8 years ago. And after doing that for a few years and talking to my surrounding, my colleagues at work, I was still corporate employee at that time, and my friends who were mostly Wall Street people because of my background and my proximity to New York, I realized that most people have never heard of syndication. So I wanted to change that, make an impact, and help others follow my footsteps. So I started SAMO Financial with the goal of helping other people build passive income for their families, diversify out of Wall Street essentially, so they can mitigate the impacts like we're having now with the stock market and save on taxes. So that's how SAMO was started almost 5 years ago at this point, still rolling with it, educating people, helping them to find passive real estate investments. And on top of it, a couple years ago, when COVID hit, my W-2 job got eliminated. I got the pink slip. I could not have been happier. It was the best day of my life. My only regret is that did not happen sooner.
Yeah. Yeah. A lot of people have that regret for sure.
Yeah. But I'm very, very happy. It's been over 2 years, happiest years of my life. And also, while in that journey, a friend of mine introduced me to Mike Zlatnik. He's a real estate fund manager and has a number of funds. So Mike invited me to join them and help them to spearhead investor relations. So I'm doing that in addition to SAMO, helping TF Management Group to spearhead investor relations. So everything I do now is in real estate, whether it's investing for myself, my friends, my family, or helping others. It's all 100% real estate. And it's been amazing 2 years, other than the pandemic, of course.
Sure. Well, and so tell us a little bit. I'd like to go. The first thing I'd like to know is how many doors. Let's talk about SAMO individually and what you have like, but like on your own or as a partner with whoever. How many doors do you all have under management, or how many dollars in assets
Oh
under
my,
management?
oh my goodness, Casey, it's been a while. I haven't counted. So, what I've done is I've dabbled into single family investments. I bought condos, of course. So that's been on and off. Then, when I went into the commercial real estate, I started with multifamily, but then I saw the need to diversify. So, I've invested into other commercial real estate classes from storage to mobile home parks to industrial. So it's all over the place. Honestly, I don't know how many, but from syndication standpoint, it's definitely been over 20 at this point. So
Yeah,
many
yeah.
more.
Well, and so, tell us. I always like to hear about their very first one, because it seems like the first syndication is where everybody gets. That's like what makes or breaks most people
Absolutely,
getting into this. So,
absolutely.
tell us a little bit about your first one and where you raised the capital and so on.
Yeah, first one was a interesting experience. So I can tell you about the first one as a passive investor, and then I can tell about the first one as an active investor. So my first one as a passive investor, which was almost 8 years ago, that was a very, very interesting one because taking that first step was nerve wracking. I was doing a lot of research. So as a former tax accountant, I done like different checks, like background checks, criminal check, and so forth on the operator. I went as far as to go to their social media profiles, checking out what they do in their personal life, professional life, and so forth. And even that did not seem enough to move forward, even though I liked the deal. So they made a small mistake, and that mistake actually benefited me and them because that made me move forward with their deal. So essentially, this was, like I said, long time ago, and they wanted to email all of the investors, and instead of BCCing their investors or potential investors, they CC'd everyone. Well, guess what I did? I emailed every single person on the list, asking them about their experience with the operator. Two people responded. One of them is still a dear friend to me, and the response was positive. It was good all along. So I decided to pull a trigger essentially. So that mistake of the operator made me move forward to the deal. I invested in a few more with them, and I was really thrilled because after that came the snowball effect. And that's what I tell everyone. That first step, regardless whether you're a GP or LP,
Mhm.
taking that first step is always the hardest because almost immediately after that, I invested in the second, third, and so forth. And it was just a great, great journey. So this was my LP experience. Happy to share the GP experience as well if you want to
Yeah,
hear.
yeah. Let's hear the GP experience, because the LP experiences can be gotten relatively easy. I mean, as far as like, you everybody has their own due diligence items that they want to go check out, or their own due diligence on the operator, their own due diligence on the asset. But as far as your GP experience goes, the element that's so intriguing to, I think, a lot of people is the actual capital raise. Again, and the property is, so we can talk a little bit about that, but the capital
Yeah.
raise is really the biggie.
Sure, sure, and I absolutely, definitely agree with you. And what I will add, if since I've been doing both GP and LP for years now, I've created a list of questions for both questions to ask potential passive investors and questions to ask potential syndicators. So if anyone is interested, I can give you the links with those list of questions for both.
Sure.
But in terms of my first GP deal, so it was a virtual introduction. A friend of mine heard about this operator needing help, and we were introduced. The operator even went as far as flying to New York. He had potential investors here. So I met with him. I met with his broker who brought him the deal. The deal was in a smaller tertiary market, but the fundamentals were there, the job growth, the population growth, the infrastructure of the area, everything looked really good. And I actually was very, very happy that the operator flew down here. and we were able to meet in person. Um, they did not have syndication experience. They had a construction experience and then some small single family homes experience, which I thought was enough. And I decided to go for it. What happened after we closed is another story, and I'm actually writing a use case on that with a ton of lessons learned of things not
Sure,
to do
sure. Yep.
when you partner with other people. Because I learned a ton, but it was a very expensive experience because I had to hire a couple of legal groups and have help of the legal counsels to help me deal with that operator and then eventually be able to take him out. And obviously, for privacy reasons, I'm not mentioning any names in
Sure,
here
sure.
or
Yeah, yeah, yeah.
location of the property. But I have a ton of lessons that, as I said, I'm putting together as to the things that you should not do when you're partnering with others on a syndication deal.
Yeah, and when you and a lot of people forget that. I was actually my wife and I were having a talk last night, and she's of course wrapping her mind around everything as she learns the
Hmm.
what these different terms and what all this stuff means and so on and so forth. And she was asking about whether somebody was going to move forward with a partnership.
Hmm.
And I said, they're thinking about it. And she's like, well, what do they think about when they think about it? And I said, well, that's a good question. I said, but though the people with experience, those of us with experience know that, and that's in any type of business in
Hmm.
general. The experience for myself anyway is a partnership is like a marriage. What is a
Yep.
marriage? It's basically a business marriage, and just like you said, when you got into a partnership and you decided, whoa, this isn't really what I signed up for, you're stuck. You're there. Your money's
Yep.
there anyway. Now you can obviously say, hey, just call me when it's done. But the issue with some of these things is the due diligence of on the actual operator theirself, and that's what we learned and that's what pushed us toward the fund to funds model was, hey, we can dissect 50 different operators and choose the top two or
Yep.
three that we know have taken deals full cycle, and they're pretty efficient operators and so on and so forth. And so, but it's a marriage, and that was the
Yep.
best way I could explain it to her was sometimes these people investors, potential investors, or even the GP has to think whether or not they want to be quote unquote married to that person. And that's a lot of times, during due diligence on from an investor standpoint, an investor doing due diligence on operator and asset, the geography, whatever it is they're doing, at the same time, a lot of people don't realize that operator or the sponsor is really effectively doing almost the same due diligence back to make sure that, hey, we've got an alignment of interests here. We're not, or an alignment of beliefs and an alignment of whatever you want to call it. And this guy's not going to be a worrisome investor, because
Right.
the worst type of investor you can have in your deal is somebody that then wants to put their money in and then wants to micromanage, micro control, I guess is probably the better word, because they're not going to get any management side of it if they're on the LP side, but the they want micro control
Yeah.
of little things. And it's almost like, hey, if you want to micro control things, you should have been, you should just take your money and go buy a single family or go buy something and so, yeah. um the lessons that you learned, I mean, yeah, give us an example of maybe one or two lessons that you're going to share in your case study, that you learned along the way.
Sure, Casey. So, by the way, your words are absolutely golden. It's a marriage, and just like in any marriage, you need a prenup. And that prenup translates into operating agreement. So, put as many clauses as possible into that agreement, as many what ifs, essentially. What if someone dies or becomes incapacitated? Who makes the decision? And one of the most important lessons is just because someone is boots on the ground, found a deal, has more of a profit sharing ability, does not automatically translate into them having more of the decision making authority. It does not have to be that way. it's all negotiable. So discuss it and make sure if there are multiple people, multiple GPs in a deal, then at least half of the people or majority decide on any major decisions. Obviously, minor decisions you can leave to whoever is spearheading asset management, but on all of the major decisions, if it's a major construction decisions, or if you had a fire, or any legal challenges with the tenant and whatnot, or anything else, that has to be decided by majority partners in a deal. So that's absolutely critical. And then essentially trust but by verify, especially if this is your first partnership. If you're working with new partners for the first time, then always spend time with them ahead of time. Talk about their prior projects, even if the projects were not syndications, even if they were JVs or other things. Discuss how they acted or reacted to certain cases and situations, and see if that aligns with your interests. Discuss the long-term goals and investments. See if there is a full alignment there. If there is no alignment, step away, because in addition to you marrying this partner, you're also bringing investors to them, and it is your fiduciary duty to stay true to your investors and make sure that the deal performs. You do whatever is absolutely necessary to do that. And in my case, I essentially took over the asset management and was able to do it long distance. Yes, it took some time to dig out of the hole that our boots on the ground partner has put us. But you do whatever it takes to make sure that you are performing on your fiduciary duties to your investors. And
Yeah.
ideally, doing that due diligence ahead of time, learning more and getting to know each of your partners, however many you have, two, three, five, whatever it is,
Well,
getting to know each and every one of them is essential.
I read a blog yesterday, and just kind of I call it like my information hour, where I just kind of sit and go through and look at different, not necessarily like technical chart studies and stuff, but just reading and trying to stay up with, I guess, the times, if you will.
Hmm.
And one thing that I read, a guy that I respect, he's actually going to be on my show here in a few weeks.
Nice.
He said anytime there's only one, like, he doesn't invest in deals that only have one GP. And I guess the laundry list of reasons for that, of course, I guess the very top is death
Hmm.
of a GP. Then who
Sure.
has control, and does the state have control? So I guess that's kind of the first, but then on down into the psychological reasons of, hey, it's always better off to have like checks and balances.
Yeah.
And it was a very interesting article. And I guess I bring that up because I just read that, and you're talking about the quantity of partners or GPs or whatever that you've got in a deal. And so anyway, it's rather interesting, the points that you bring up there, and that you actually have that are doing a case study on what not to do, or I guess things to ask, or things to pay attention to, or things to look out for, whatever you're going to title that. But
Yeah,
um,
yeah. I want to be able to share my experience with other people so that they do not repeat the same mistakes I have, because that will save them, again, a lot of time, stress, and a lot of money in legal fees that I had to spend
sure.
on the project.
Now, when if without again, without giving, yeah, any names or any deal or anything like that, you had to push for the removal of
Yeah.
one of the GPs, or
One of
the
the GPs.
GP.
One of the GPs, yes, I had to push, and the first legal team I hired were not successful. I thought that hiring someone local would be beneficial, not because no one else in that locality was good enough. It's just I didn't have a good experience with that attorney, and then someone recommended me this group. That they worked with, where they had a similar case to mine. Essentially, they had bad relationship with the partner, and so that the partner went the other way, and this legal team was able to help them. So when I hired this team, I saw a completely different approach, and uh, with the time, they were able to legally and officially help us to completely eliminate this person as a GP. They remained the LP. Of course, they had a small LP position in the project, but they were removed from GP and from the decision making. And from that point on, we started our journey on the way out, essentially, to bring in the property back to the operational point where the P&L is positive rather than being negative. And it took a while, but not only we got out positive at the end of the day, but over time we were able to sell return investors their principal and give them a little cherry on top of a tree by making a small gain. So that was
Well,
a
yeah,
blessing.
that's definitely always the end goal is to have the ultimate gain at the end. But so when we start looking at piecing all of this stuff together and going
Mhm.
forward, and I assume that have you been in multiple deals with the same bunch
No,
now at this point?
no, I have not worked with these people again.
Okay.
So
Okay.
yeah,
Okay. Even
partnership.
I'm talking about even with that, even with the one GP removed or whatever.
Yeah, I have not dealt with them again. No, we don't
Okay.
have any relationship. I didn't want to deal with them again. Of course,
Well,
that
yeah,
experience
yeah.
was
And then
enough.
once you tackle or have to spearhead getting your money back, or at least at least getting. I actually read something the other day. I know I'm talking about everything I've been reading, but guy said, let's see, what did he say? He said return of capital is more important than return on capital,
Absolutely, completely
and
agree.
I thought, man, that's pretty thick stuff because it's really saying that, hey, we need to give them their money back, and then if you don't make anything, then that's one thing, but if you at least get what you put in back, you feel like you at least it was a small win, I guess, maybe. So anyway, but so tell us a little bit about samo and for samo financial and the direction that it's going right now, and what you all look for in the future.
Sure. So SAMO has been very active in educating folks in becoming sophisticated passive real estate investors. I found that many people have challenges, especially at the beginning, deciding how to invest, what to invest, how to read offering memorandums, how to understand it. So I've put together a coaching program where I coach people one on one, and I even am thinking about potentially doing a group coaching, sort of like a mastermind, helping people not only work with me one on one, but have the ability to share and work with other people and share the ideas, evaluate deals together. So that's something that I'm looking to do down the road. But at this point, I have quite a few happy customers and people that are also investing with us and have invested in a family of the Tempo Funds, the group that I represent as the head of investor relations. And it all comes down to seeing people as the return customers, and not only doing that, but also referring not just their friends, but their family, their loved ones. I have many investors that are bringing their parents and siblings into the deals. And what can be a better recommendation that someone saying, "Oh, I brought my mom into the project," or "My younger
Yeah.
brother is coming with us." To me, that's gold. That's absolute gold. That means
Yep.
that people are trusting us. They know that we are the trustworthy operator. They trust our experience, our integrity, honesty, and especially they want to stay with us, and we want to have them as a happy customers for many years ahead.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cashflow Pro part of your day. Now, back to the show.
Now, are you doing 506Bs or 506Cs?
Majorities of 506 Cs. We just had one 506B recently. And the main reason we did that because I insisted on opening it up to people that were asking again for their family and friends, and that this was very rewarding experience because they brought in a lot of family members that couldn't do it otherwise because they were not accredited investors, but
Sure.
otherwise majority of the projects are 506Cs for us.
Now, where are you finding investors for your 506C? I know a lot of folks have that's kind of the Achilles heel is being able to find accredited investors. What are you using?
So it's been essentially a slow, steady process of establishing and building relationship. When I started out, I didn't have many people, so of course I started just like everyone else with family, friends, reached out to them, explained to them what I was doing, and slowly, gradually started building that. Started building my thought leadership platform by writing articles. Being interviewed on a podcast like yours, Casey, and presenting on various stages. I had a lot of people reach out after I presented in Denver at Raising Money Summit about 3 years ago. And then other summits and other presentations are always bringing people reaching out. And then it's word of mouth. And then through the TF Management Group, the fund management company, we are actually trusted advisors in a mastermind group for dentists and physicians, and that helps to tap into that network of medical professionals for the deals through the TF Management Group, of course.
Awesome. Awesome. That's great. So, and that's the one that you're the head of the investor relations.
Correct. Yes.
Awesome. What do you find as the what are some of the biggest challenges of investor relations?
Obviously, when you have happy clients, everything is hunky dory. But when we're going through a slowing economy, we're experiencing Wall Street turbulence, or just like yesterday, the Feds are raising rate again by 75 bips. People starting to worry, and it all comes down to um, being I guess a psychologist of some sorts, and just helping people, not necessarily just saying, hey, come down, it's all good, but explaining them how our strategy is shifting and what we're doing as the operators or as the fund of fund managers to mitigate the risks for the projects that we're bringing to them. Explaining to them that number one, we're only working with the operators that's been through the recession, that have the experience and track record. Number two, that nothing will change our integrity. And then number three is saying that we are on top of the operators doing the due diligence. We are doing our own due diligence when we evaluating any deal before deciding whether we want to move forward with that deal. So that those are, I would say, the three most important factors. Of course, there are many more. And another good example is we've started asking operators to do the stress test analysis and see what would they need to do in their business. And there are many various real estate operations, from multifamily value adds to commercial lending and to hotels to affordable housing conversions and whatnot. And we asking some of these operators to do the stress testing and to let us know like at what point they would be able to still survive and last. For example, we're reviewing a multifamily project right now, and I can't, for privacy reasons, mention any details. But when we asked the operator the stress testing question, he said that they can be positive at a 40% occupancy. That's perfect. I mean, that's what we want to hear. If they can survive through the recession at a 40% occupancy point, then that's definitely a deal that we want to pursue reviewing, not necessarily go in just based on that one factor, but this is one of many critical factors that needs to be considered when evaluating any deal for potential investment to potentially work on.
Yeah, I mean that's all such good information, and I mean so many valid points there and takeaways of what you just said as far as like and the challenges and stuff, and then that hopefully gives people out there that are maybe thinking about investing an idea of what they need to look at, So, all right, well, listen, we're running up towards the end of our time, and we have a couple of questions that we ask every guest that comes on the show. There's no right or wrong answer, but the first question is, what is the best book that you have either recently read or are currently reading?
Oh boy, it was a good book, but I can't remember the name of it, so I'll have to give it to you after the show. I see the cover, like I see the colors of the cover. I can't recall the name of a book or the name of the author, but one of my favorite books in general, it's not a real estate book, but I really love it. It's an ancient book written over 100 years ago, is The Richest Man in Babylon by George Clason. I absolutely love and adore that book. I recommend it to every single person who wants to grow and build their business and just have a wealth and leave a legacy after themselves.
Sure. Well, good. All right. Now, the next question is, what is a dream vacation that you have either taken or hope to take?
I've never been to any exotic places, and for me, an exotic place is where people speak the language that like is completely different, like not the letters that I'm used to. So, and the culture that's drastically different than what I'm used to here. And obviously, I'm an immigrant myself, but I came from former Soviet Union. But I've never been to Asia. So going to like Australia or Japan would be something that I would want to do down the road.
Awesome. Yeah, I think Asia is pretty high up on my list too. So, well, listen, Alina, thank you for coming on the show. We really appreciate the time. And how can the listeners, if they heard something that resonated with them, or they'd like to maybe talk to you more about your T, is it TF Financial, right?
Yeah.
How can they reach out and get in touch with you?
Sure. I'm on social media, so they can find me through LinkedIn or Facebook, or they can find me through samofinancial.com, and my email is alina@samofinancial.com, so that's pretty easy.
Awesome. Well, Alina, thank you so much for your time. And listeners, as always, please head down and hit the subscribe button if you like what you heard and you want to be notified when we come out with new episodes, which is daily. And also leave us a 5-star review and leave us your review so that we know what you like, what you don't like, and what we can do to help further your financial education and possible investing in real estate syndications and so on. So I want to thank everybody for their time today. And Alina, thank you again.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.